Hello everyone, we are pleased to welcome you to this meeting presenting Wavestone's results for the fiscal year 23-24. Today, the speakers are Pascal Imbert, co-founder and CEO of Wavestone. Hello Pascal.
Hello Justine, hello to all.
And Laurent Stoupy, CFO of Wavestone. Hello Laurent.
Hello everyone, hello Justine.
Pascal, the floor is yours.
Thank you, Justine. Maybe to start with, it's good to say a few words about the identity of Wavestone, as the past year has seen a profound change in the firm's scope. Wavestone is a consulting firm, this didn't change, which supports major corporates in their transformation projects, thanks to a portfolio of first-class capabilities, including business sectorial skills, digital and technological expertise, not forgetting our recognized skills in sustainability. Wavestone has a global presence with 5,500 employees and sales of over 900 million euros. We differentiate from our key competitors on three aspects. First, Wavestone is an independent consultancy, a pure player in the consulting business, which guarantees unbiased recommendations, unlike Accenture, for instance. Second, Wavestone is a firm of European origin, unlike its major global rivals of all of Anglo-Saxon origin. And third, very much linked to this European DNA, Wavestone has placed at the heart of its project a core set of values that we name the positive way, shared by all of our teams, with the ambition of generating positive impacts for all our stakeholders. From a geographic perspective, Wavestone has a strong position in three of continental Europe's main markets, namely France, Germany, and Switzerland. Wavestone has also a strong and growing presence in the UK, in North America, and to a lesser extent in Asia. And more broadly, we have a presence in a total of 17 countries. With 5,500 employees, Wavestone is not a consulting giant. But we do have one advantage, which is that we are a fully integrated firm, the exact opposite of the silos that characterize traditional partnerships. And this enables us to mobilize for each of our clients multidisciplinary global teams in perfect seamlessness. The following slide shows a breakdown of our revenue on a pro forma basis during the fiscal year 23-24 by business sector on the left-hand side and by geography. And we show at the bottom, and you can see at the bottom of the slide the list of the firm's top 20 clients. As you can see, the combination with Superior has greatly strengthened the balance of sectors that represent Wavestone's revenue. In particular, we strengthened our business activity in insurance, in transport, and in the automotive and industry sectors. In terms of geography, as I just mentioned, you can see that Wavestone is now strongly positioned in three main markets in continental Europe, France, Germany, and Switzerland, with France now accounting for only 50% of the total business activity of the firm. Lastly, our top 20 of our clients is representative of Wavestone's more global client portfolio, a portfolio of major accounts, diversified both in terms of clients and economic sectors, also diversified internationally, and with Deutsche Bahn becoming Wavestone's first client. I didn't pronounce it well. Deutsche Bahn becoming Wavestone's first client. If Carsten was listening to me, he would be mad at me. I now hand over to Laurent.
Thank you, Pascal.
I try to improve in German, but it's a demanding language.
Dankeschön. As we announced on April 29th, for the whole of the 2023-2024 fiscal year, Wavestone achieved a revenue of 701.1 million euro at full scope, a growth of 32%. At constant scope and forex, excluding Penn, Coris, Superior, and Aspirant, growth stood at 9%. Excluding Cuperior and Aspirant, revenue reached 586.9 million euro, above the objective of 580 we conveyed at the beginning of the fiscal year. On a pro forma basis, calculated as if the acquisitions of Cuperior and Aspirant had taken place on April 1st, 2023, Wavestone's 2023-2024 revenue stood at 943.8 million euro. This will be the reference for target for the 24-25 fiscal year. Now a few words about Cuperior's activity. The company has experienced a fairly similar start to calendar 2024 to that of the rest of Wavestone. Indeed, even if the German economic environment is significantly depressed, the impact on Cuperior was limited by the resilience of demand in the insurance, transportation, and energy sectors in which the company is particularly active. Cuperior has therefore been able to maintain its utilization rates at the start of 2024 in line with its business plan, with levels comparable to those of 2023 last month. To be noted, though, that as expected and like the rest of Wavestone, the firm experienced a marked slowdown in growth over Q4. Overall, during the period from April 2023 to March 2024, Cuperior generated revenue of 333.4 million euro and a recurring operating profit of 31.5 million euro, representing a recurring operating margin of 9.5%. As previously said, Wavestone consolidated revenue grew by 32% over the fiscal year. Today, we are introducing before the operating income a new aggregate called recurring operating profit. This is an alternative performance indicator calculated by subtracting operating expenses from revenue in order to assess the performance of current activities. This indicator corresponds to operating income restated to exclude the amortization of client relations and other operating income and expenses. To put it simply, this indicator is the same as the EBIT indicator that we have used until now in our financial communication. We do that to be more compliant with accounting rules as defined by authorities. On profitability, the firm achieved a recurring operating profit of 101.3 million euro, up 32%, compared with the previous year. The recurring operating margin was 14.5%, the same as last year. Excluding Cuperior and Aspirant, the recurring operating margin is 15.4%, higher than our target of 15%. On a pro forma basis, that is to say, if we consider the Cuperior and Aspirant combination as if they occur at the start of the 2023-2024 fiscal year, the recurring operating profit was 123.9 million euro, with a recurring operating margin of 13.1%. Operating income stood at 85.8 million euro, up 18%. Lastly, after taking into account income tax expenses, the net results stand at 58.6 million euro at the end of the fiscal year, an increase of 17%. Net margin was 8.4% compared with 9.4% a year earlier. And after considering minority interests, group share of net income was 58.2 million euros. Please note that on a pro forma basis, this was 67.7 million euros. Let's now look at our cash flow statements. Over the 2023-2024 fiscal year, Wavestone generated 101.8 million euro in cash flow, up 22%. Tax payments was 21.7 million euro, and thanks to significant reduction in DSO, change in the working capital requirements has released 2.9 million euro. So business activity generated 83.1 million euro in cash over the period, more than doubled the amount a year earlier. Investment transaction consumed 69 million euros over the fiscal year, mainly linked to the acquisition of Cuperion as parent and to the payment of our notes of Penn and Chorus. Cash flows related to financing consumed 7.4 million euros. And in the end, the gross cash position has increased by 6.7 million euros. On the balance sheet, shareholders' equity increased by 272.3 million euros to reach 571.4 million euros on March 31st, 2024. This is mainly the result of the 254.3 million euro capital increase linked to the merger with Cuperion. Goodwill increased by 272.5 million euros following the acquisitions over the fiscal year. The net cash position was 19.3 million euros at the end of the fiscal year, compared with 27.1 1 year earlier. Please note that other liabilities include earnouts related to the acquisitions of Cuperion as parent. Following the review of Cuperion's performance, the earnout to be paid in the first quarter of this financial year has reached the maximum possible amount, i.e. 35 million euros. In the case of as parent, the earnout can reach a maximum of $10 million. A provision of 6 is currently included in his Wavestone accounts. The earnout would be paid in the fourth quarter of the financial year 2024-2025. And I now hand over to Pascal.
Thank you, Laurent. And so let's now have a look to our outlook and what is coming next. The year 2024 has begun in an unfavorable market environment, you know it. Even if our clients are often reporting good results, the economic context remains sluggish, and both economic and geopolitical uncertainty remains high. As a result, our customers tend to adopt a wait-and-see attitude, and we can see that particularly in some sectors, such as banking, retail and consumer goods, industry, or in France, in the public sector. As a result, we need to be agile and to focus our sales effort on other more resilient sectors, such as, for instance, insurance, energy, transport, luxury and beauty, who has been a very good sector during our last fiscal year, or even life sciences, even if Wavestone for the time being is still small in this sector, we have strong ambitions regarding the clients in this area. We also have to leverage the most promising topics, at the forefront of which are IT infrastructures, where we had a good demand throughout the year, cybersecurity, still and always, SAP consulting, and of course AI. Not that AI consulting represents a significant volume for the time being, but the subject of generative AI is everywhere, and many projects are being launched. Wavestone is particularly well qualified, and we made our way successfully in this project, thanks to our positioning at the crossroads of business and technology. Against this background, we have set 3 priorities for the 2024-25 fiscal year. The first one is to succeed, obviously, in the combination of Wavestone and Cuperion. We have had a good start. All the lights are green. We now need to transform the try by mobilizing our teams even more on our new project and by transforming our image and our positions with our clients. The second priority is the continuation of an unwavering sales mobilization, focused, as I said earlier, on the most favorable sectors and on the most promising topics in order to offset the effects of a slow and uncertain market. Finally, this year, we will continue to prioritize profitability over growth, given the challenging context, which means that we will remain cautious in terms of recruitment until we regain better visibility. This caution translates into a recruitment plan of around 1,000, roughly equivalent to that of 23-24. Beyond these operational priorities, we will continue this year to prepare for the succession of the general management, since you know that Patrick Irigoyen and myself will be stepping down in the next 1 to 2 years. A selected and dedicated nomination committee has been set up on April 1st to better guide and support the work in progress. Turning now to our financial outlook. In 24-25, we are targeting organic growth between 3 to 5%. That is to say, annual sales between 972 million euros and 991 million euros. In terms of profitability, our objective is to generate an annual recurring operating margin of over 17%. These targets are at constant forex basis and exclude new acquisitions. It should be noted that the growth in the first half of the year will be lower than the rate expected for the full year due to a very significant base effect linked to a strong growth at the beginning of the previous year. And by the way, profitability will also be lower in the first half due to the usual seasonal effect, but you are very much aware of that. These are the comments we wanted to make on our figures for the year and on our outlook, and we are now at your disposal to answer any questions you may have.
So you can now ask your questions. To do so, please unmute your mic or press *6 on your phone. You can unmute your mic directly if you want to ask a question.
I know, Laurent, that you have prepared detailed and precise answers to.
I think we have a question from Derek Marcon.
Yes, good evening, gentlemen. Thank you for taking my question. Two, if I may. The first one, can you give us more color about your pipeline? And usually, I remember that you try to comment the pipeline versus sales or months. Can you update us on that? And also on the recruitment plan, so the 1,000 gross hiring that you forecast for this year, how do you see the seasonality between H1 and H2? And how does this 1,000 gross hiring translate into net staff hiring, please? Thank you.
You're welcome. Hello, and thank you for asking a question. Laurent was about to be very disappointed. Regarding the pipeline, yes, we didn't comment it. In fact, the pipeline on the perimeter, excluding Q-Payer and Aspirant, remained very good at the end of March, which means that it was at 4 months. I check. I speak under the control of Laurent. 4 months compared to 4.2 months at the end of December. So it remained at a good level at the end of the fiscal year. 4.1 months at the end of December. So a pipeline and an order book that remained quite good, but which is, as you have noticed since the last quarters, it's usually a good pipeline it's a good order book for Wavestone, but nevertheless, it doesn't, it's too spread over the coming quarters. And so it doesn't represent a pipeline that is strong enough in the short term in order to completely optimize our utilization rate. And you've noticed that we remain in the region of 73% of utilization on the same scope, which is lower than our normative figure of 75%. The the order book is, we don't measure it the same way, but it's stronger on superior side, and we have a visibility, I would say, until beginning of H2. So on superior side, the main question is more for the time being to get the orders in order to build the visibility on H2 of the fiscal year, whereas regarding Wavestone, it's more building the visibility from one quarter to another. And to be completely comprehensive regarding the sales, I would say that the beginning of 24-25 fiscal year has been slow in terms of sales in April and May. This is not unusual. It was especially slow in the month of May this year due to a calendar effect. We expect a much stronger sales orders in June, so too soon to tell what will be exactly the figure for the first quarter. But I would say that we have no margins here. We have to make a good sales in the weeks to come to have a good Q1 and then to continue to prepare in a satisfactory way the Q2. Regarding the recruitment, most of the recruitment, the arrivals will take place at very end of H1, and most of them during the Q3 of the fiscal year. We hire a lot of young graduates, and usually they arrive in the company between September and the end of the year, even if it can be on the superior side a little more balance between the quarter. Nevertheless, given the weight of the recruitment that on the legacy perimeter of Wavestone, you will see most of the arrivals during the H2, which means that we may see a decrease in our headcount at the end of Q1 and Q2, and then the increase of our headcount by the end of the year. And we can expect on the entire fiscal year a slow increase in our headcount, 2 to 3% of net hires over the entire fiscal year on the total perimeter of the firm. Of course, if we have signs of a recovery that comes sooner than what we expect for the time being, we might recruit a little more than what is planned for the time being, but we have no signs or no indication for the time being that this could be the case.
Very clear, thank you. And the difference in terms of visibility between Superior and Wavestone, so on order book, is it linked to the duration of contract or anything that could explain this difference?
Yeah, absolutely. The basket at the Superior is way larger. The average basket is way larger than on Wavestone side. There are many contracts that are of a few million euros, which is and very much less so on the Superior side. This is linked to two topics: the fact that decision makers in most of legacy Wavestone geographies tend to cut orders in small slices corresponding generally to 3-6 months of work. Even if the project is larger, they prefer to commit to their consulting expenditures gradually. And moreover, as you know, Superior is very strong in the SAP consulting business, which gives for very large engagements with significant teams in size and significant duration, because the transformation around SAP will last generally 2-3 years. And there are several of these engagements that are going on at any time on Q-Parier side. And we begin to see that, little more of that on the legacy Wavestone perimeter, because we leverage the know-how of Q-Parier regarding SAP consulting. And so we begin to win some SAP engagements with which are at the I would say at the upper range of the size of our orders.
Very clear and very helpful. Thank you.
You're welcome.
So if you still have a question, you can unmute your mic or press *6 on your phone. I guess, Pascal, I'll let you conclude.
So thank you very much for attending this conference call about our annual results. We will be back on July 24th for the publication of our Q1 24-25. And we will have the opportunity to comment on the following morning, on the morning of July 25th, the elements of the Q1 at the occasion of Wavestone's annual general shareholders meeting, if you are courageous enough to attend to a general meeting in Paris during the Olympics. Thank you very much, and see you soon. Bye.
Thank you.
Thank you.
Thank you. Have a good evening. Bye.
Bye.